We're now ready to tackle all things related to income, both the accounts that are featured on the income statement, as well as those that factor into the calculation of other comprehensive income. And once again, I'm giving you a trial balance to work with here. But one thing I've done to make your life easier is I've only provided you with all companies' temporary accounts. Every single last one of these is going to be closed to either retained earnings or accumulated other comprehensive income. And I've given you their pre-closing balances in the instructions at the top there. So your task comes in three parts. Number one, I want you to classify each of these accounts as impacting net income, other comprehensive income, and there is one single exception in this list that impacts neither of those. So see if you can figure out what that one is. My recommendation for this task is to first look for those accounts that flow through other comprehensive income. If you remember from our concept quiz video, we're going to be looking at 4 categories of transactions. They tend to be those unfamiliar ones. So I would start by identifying the 4 OCI items, assuming that nearly all the rest of the accounts impact net income, but look for that one exception as well. After doing that, I want you to prepare an income statement, but I want you to do it using a multi-step format, which if you recall means show all those intermediate calculations. Show me what gross profit is, operating income, earnings before taxes, before ultimately arriving at net income. Then I want you to calculate several figures for me. If you've done that income statement, you should already have net income, but I additionally want you to solve for other comprehensive income, and then the post-closing balances for both retained earnings as well as accumulated other comprehensive income there. I do want you to try these on your own first. We're still in that stage of the semester where we're not learning together. I want you to try this on your own first. But that doesn't mean that you should do all 3 at once. But I would say take them each in parts and pause the video as you're going through each of these solutions. Okay? Ready, set, go. All right, let's now walk through the solutions here. We first need to classify each of these accounts as impacting net income or other comprehensive income or neither. If you think back to those 4 unusual types of transactions that flow through OCI, I hope you thought of things like derivatives. Yeah, we're not going to even touch derivatives at all in this class. Same thing with financial statement translation. Both of those topics are going to be covered in an advanced financial accounting class. But we also have holding gains and losses for long-term investments. Those flow through OCI, not net income. And lastly, things related to pensions. Both long-term investments and pensions, you will see those in Accounting 3020. But for now, we just need to know that these are the 4 accounts that flow through other comprehensive income. And when you do the accounting for these in subsequent classes, you're going to be familiar that this is something outside of the income statement. Well then, nearly every other account here is going to flow through net income with the exception of dividends. It's not on the income statement. It doesn't factor into the calculation of net income. Well, now that we have all of these net income accounts, that's going to help us a lot to prepare a multi-step income statement. And I bet all of you very quickly knew at the top line, we've got to have sales revenue minus cost of goods sold to arrive at gross profit. This reflects top line profitability. How much are you selling your goods and services for, and how much does it cost you to acquire or produce those? It's a good metric. After gross profit, we're going to subtract out all of our operating expenses. And in this trial balance, I've summarized it in one single account. But this could include things like depreciation, SG&A expense, bad debts, all of those core operational costs to run your business. They will be in operating expenses, and that helps us solve for operating income. Next, we're going to deduct any non-operating items. We have a positive gain on the sale of equipment there, as well as a holding loss. And then when coupled with interest expense, we combine all of those to then arrive at earnings before taxes. Well, the last thing we have before getting to net income is subtracting out our income tax expense. And we then arrive at net income of 60,000 there. Well, very good. Well, we've now solved for net income. To get at other comprehensive income, you're just going to take the sum of all of those OCI items. Now, they're equity accounts. Every last one of them is an equity account. So credits reflect increases to that income, debits reflect decreases. So on balance, we have more debits than credits. So we actually are going to reflect a other comprehensive loss of $7,000 for the period. Next, comprehensive income is equal to the sum of net income plus OCI. We've got a positive profit on the income statement. We're going to deduct our other comprehensive loss for the period. So comprehensive income is 53,000. And now we're going to do the closing process. Let's close all of the net income and OCI accounts to retained earnings and AOCI separately. So for retained earnings, we know it's going to increase with all of those accounts flowing through net income, but this is the time where we do remember dividends. We subtract out those dividends, which are distributions back to the owners of the company, right? And so it has a post-closing balance of 357,000, and then AOCI is going to be the pre-closing balance minus the other comprehensive loss of 7. And there you have it. We're now ready to prepare 2 financial statements from all of this data, both the income statement as well as the statement of comprehensive income. Well, good job, everybody. Hopefully you've got your work well documented. Upload that and I'll be happy to give you full credit. Good work today.